More than just business news, we're news for business people.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, India's first live streaming digital news service. I am Jayesh Khilnani, and alongside me is Agam Vakil to take us through the F&O space. But let's have a look at what one can expect from trade today. Well, if you look at the SGX Nifty, that is pointing to a Let's have a look at how the global markets actually fared overnight. So we had the Dow Jones, which snapped its two-day winning streak to end about 38 points lower. And all the European indices also, they actually paired gains and closed lower from where they actually opened. If you look at the Asian markets, the Nikkei and the Hang Seng are trading 0.5% higher. So one can expect that, based on the SGX Nifty, which is trading about 33 points higher, one can expect a close, an opening for the Indian markets near the 10,600 mark. As far as the ADRs are concerned, Vedanta and Wipro were the two big movers. So Wipro closed about 2% lower, followed by ICICI Bank, HDFC Bank and Tata Motors, which also declined in trade. If you have a look at the gainers, Vedanta was the big one over there. That closed about 3% higher, followed by Infosys, which also managed to eke out gains for itself. But the big cues coming in from the commodity space, where oil markets are trading currently positive, but actually closed nearly 3% higher, and it touched a high since 2014. Now, if you look at the base metal space also, big move coming in from aluminium and nickel. So aluminium actually surged about 5.5%, while nickel managed to surge the most since 2011. That ended about 7.5% higher. Now, if you look at copper and zinc, those actually I managed to gain also by about 2 to 3.5%. If you look at the Shanghai Futures Exchange, now most of these base metals are trading with a positive bias, with zinc, aluminium and steel gaining about 1 to 2.5% each. If you have a look at the fund flows that we got for the Indian markets, if you can have that on the screen. So the foreigners actually sold more than 900 crores. Remember, this is the second day they've actually sold more than 900 crores, while the domestic institutions actually pumped in more than 850 crores. But for the month itself, the FIs have sold nearly 2,500 crores, while the DIs have actually bought in more than 5,000 crores. As far as some of the key indices are concerned, the Nifty actually ended about 22 points lower and snapped its 9-day winning streak, and thereby the Nifty mid cap and the BSE small cap index also closed lower for itself. But as far as the gainers and losers are concerned, we had the Nifty FMCG, which was the top gainer. Remember that this is the second day that it managed to top the charts, followed by the Nifty Media Index, which also closed about 1.4% higher. As far as the losers are concerned, it was largely led by the banking space. So we had the Nifty PSU Bank and the Nifty Bank, which managed to close down about 0.9 to 1% lower. As far as the contribution is, or let's have a look at the wicks also. So no major moves coming in for the India Volatility Index, managed to close about 0.5% higher. Now, as far as the contribution is concerned, largely led by the financial space, which is the HDFC Bank, Axis Bank and HDFC. For the gainers, we had ITC, Wipro, Ultratech and Z, which managed to gain for themselves. But Agam, what can we expect from the F&O space?
Right, Jayesh, we've seen consolidation continue, even though we saw the benchmark indices snap 9-day gaining streak. Very little change with respect to futures in the Nifty. However, the Nifty Bank futures did see unwinding of nearly 5% in open interest. As one might expect, the VIX hasn't moved around too much either, at around 14, and the Nifty put call ratio, that also currently at around 1.59. Moving in with respect to changes in open interest, we have seen increased activity in the 10,500 put, which has seen more writing, unwinding in the 10,300 put, and some more writing around the 10,700 mark, which is also the one with the maximum open interest. But in terms of stocks, Jet Airways moves into the ban, so we can expect restricted trade there, and we're looking at a lot of longs building in something like a V-Guard Industries, as well as longs building up in something like Amara Raja Batteries. But on the whole, it's been consolidation, and we just had to wait and watch whether this trend continues. But that's as far as our own markets go. Let's now go across to Bloomberg's Tom McKenzie for all the headlines from across the globe.
President Trump said he'd abandon plans for an historic summit with Kim Jong-un if he feels it wouldn't be successful. He also said he'd politely walk out of any meeting if things aren't going well. He tweeted that convincing Kim to give up his nuclear weapons would be great for the world, including North Korea. Bloomberg's been told Sweden and Switzerland are possible locations for talks.
If we don't think it's going to be successful, Mark, we won't have it. We won't have it. If I think that it's a meeting that is not going to be fruitful, we're not going to go. If the meeting when I'm there is not fruitful, I will respectfully leave the meeting and we'll continue what we're doing.
Turkish markets rallied as President Recep Tayyip Erdogan called a snap election for June 24th, more than a year earlier than scheduled. The vote should consolidate his one-man rule of the region's largest economy, transforming the political system by eliminating the Prime Minister's job and weakening Parliament. Turkey remains under a state of emergency following July 2016's failed coup. UK Prime Minister Theresa May suffered a double defeat on Brexit with the House of Lords, supporting a bill to remain in the customs union and one protecting people's rights after the split. The 573 peers who voted was the 7th largest turnout in the Chamber's history and included a sizable Conservative rebellion. The government signalled it intends to overturn the vote in the House of Commons. Amazon jumped in extended trade as CEO Jeff Bezos said the Prime service has topped 100 million subscribers. Bezos noted the milestone in his annual shareholder letter, adding that Prime shipped more than 5 billion items last year. He also promised to keep investing to meet ever-rising customer expectations. Amazon shares are up almost 70% in 12 months, nearly 5 times the gain in the S&P 500. Global News 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Tom McKenzie. This is Bloomberg.
Stock of the day is expected to be NMDC on back of the price cut that the company has taken, which has been the sharpest that we've seen since October 2017. The company has gone ahead and after keeping the rate steady in April has gone ahead in the mid of the month and slashed prices by as much as 100 rupees for both lump as well as fine iron ore prices by as much as more than 3%. Now with this, lump price and lump prices stand at 2,900 per ton and fine ore prices stand at 2,560 per ton. Notably, this is the sharpest cut that we have seen since 2017 and this is on back of the falling iron ore futures prices. Also, if you look at the monthly trend that the company has witnessed after keeping the rate steady at the start of April, the company has gone ahead and reduced the price of lumps by as much as 3.3%, while that of fine has been reduced by 3.8% for this company. If you look at the iron ore futures trend from the start of the year, the futures have actually fallen by as much as 11%. In fact, the futures have fallen 11% yesterday's session, which is the highest level of cut that we have seen since Feb 2018. In terms of the month, iron ore futures have actually fell by as much as 10%, which is sharp cut and has started reflecting in NMDC price trends.
Let's also get you a check on the commodities and the currency space. Starting off with the oil markets, in fact, the entire commodity space was buzzing overnight. So oil markets currently trading about 4% in the green, but actually managed to surge nearly 3% overnight. Now, this is on the back of the oil inventory data, which declined as much as 1.07 million barrels for last week, as per EIA data. So backed by this, oil actually touched its highest level since 2014. Also, we understand that OPEC and Russia are scheduled to make Saudi Arabia later this week. We'll stay on top of that development and get you all the latest updates on that front. As far as the base metal space is concerned, the index itself surged about 3.5%, and that was the most since Feb 2017. Now, two metals which particularly gained were aluminium and nickel. So aluminium posted its 5% gain. This was the second 5% gain that it saw for itself in the last 3 days. Also, nickel surged most since 2011. It actually managed to end about 7.5% higher. Now, if you look at some of the other base metals, copper, which surged about 2.5%, and zinc, which actually managed to eke out gains to the tune of about 3.5%. Now, if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a positive bias, with zinc and aluminium trading higher by more than 2%, and steel actually managed to gain about 1% for itself. Now, if you look at the gold prices, overnight we did manage to see gold actually closed above the 1350 mark, but currently trading as flat as it can be. With that, let's shift focus to the currency space. Morning, Saloni. What cues are you picking up?
Good morning, Jayesh. So, speaking about Indian rupee, it ended little changed yesterday at 65.66 levels against the dollar. Now, with a marginal fall of nearly 2 paise yesterday, the rupee extended its downward movement against the dollar for the third straight day. And remember, the home currency had fallen to an intraday low of 65.79 levels against the dollar in the early trade yesterday. However, according to dealers, RBI's suspected intervention in the currency market largely helped the rupee to recover to its day's high of 65.59 levels a dollar. Also, Edelweiss currency dealers expect rupee to decline to 66.25 to 66.50 a dollar in the next 3 to 6 months if oil prices continue to trade above the crucial 70 mark. Well, speaking about the bond market, sovereign bonds declined yesterday as yield on the 10-year benchmark security ended nearly 5 basis points higher at 7.54%. Now, in terms of flows into debt market, global funds reduced their rupee debt holdings for the 4th consecutive session yesterday. They reduced their portfolio in the tune of nearly 2,240 crores according to NSDL data. Well, on the global front, dollar index now trades higher for the 3rd straight session. It trades near 89.70 levels in the early Asian hours, and dollar index is largely supported by a rise in US Treasury yields, which trades near its 1-month high of 2.88%. And lastly, speaking of dollar rupee, now it is trading at 65.72 levels against the dollar in the non-deliverable forward markets, which indicates a negative opening for Indian rupee in today's trade.
Well, amongst the stocks that we are tracking today is Mindtree, which reported the numbers after market hours. Strong set of numbers coming in, beating estimates. So revenues grew by 6%, net profit by 29%. Even on the EBIT margin front, there was an expansion of about 150 basis points. HDFC Standard Life Insurance, another company which reported the numbers, net premium income grew by 24%, net profit by a strong 40%. So positive reaction likely on both those names. That apart, we're also watching out for Fortis Health. Now 3 minority shareholders, which collectively hold about 12% stake in the company, have called for an EGM to remove certain directors. That apart, there's also a development according to Bloomberg reports, which says that IHS is set to ask for more time and financial details for its bid. That apart, you have a ET report which says that KKR-backed Radiant Lifecare is ready to make a bid now for Fortis Healthcare. So a couple of developments there, and today is a day where the board was supposed to meet to evaluate all these 4 or 5 bids that they have received. So watch out for Fortis Healthcare. That apart, we're also looking out for Infibeam on the back of an order win. They will have to provide an online marketplace. So that's Infibeam. That apart, we're also watching out for Triglin Technologies. They've won 3 IT services contracts in the US, so we're likely to see a big positive reaction over there. Dynamic Products Limited, they have got a closure notice from the Gujarat Pollution Control Board for its Ankleshwar plant. So some negative development coming in as far as the stock is concerned. Bharat Dynamics is yet another one. They've signed a licensing agreement with the Defense Research and Discovery Organization. So that's another one that we're watching out for, and also a couple of bulk deals. First is TCB Bank, where Abu Dhabi Investment Authority has bought about 0.8% stake in a bulk deal yesterday, posted a good set of numbers. We're also tracking GSS Infotech, where Elara India Opportunities Fund has bought 3.8% stake. Additionally, you also have Nomura Singapore, which has bought 3% stake. Remember, just the earlier day, Nomura Singapore had bought another 0.6% stake or so. So keep an eye out on that one. Strong run for that counter. And Team Lease, where Kotak India Midcap Fund bought 3.4% stake. And GP India, that's Gaja Capital and its unit together, have sold 4% stake, 3.4 and 0.6, so total 4% stake in this counter. So you might see some reaction there as well.
My experience of over all these years, the investing experience that one has gathered, I think clearly we are fortunate that we are in India, and India is a very fast-growing economy, and it's clearly growth which basically is imperative for any successful investment. And I think growth is, of course, not just a panacea for an economy or a nation, but I clearly believe that even for a company, it's clearly growth which creates future value. So obviously in the journey of value investing, initially you kind of go out and say, okay, what is value? And you could look at things like discount to book value and dividend yield and all of that. But clearly I think over a period of time, I've realized that investment success depends a lot on being able to identify growth very early on and then ride the entire value discovery journey. And I think that's clearly very, very central.
By this definition, would the nature of the investment have to be, yes, a leader, but a leader which is small in size for it to have growth continuing for years together? I mean, when you're talking about buying a leader which will have a growth opportunity which is very large, if it is already known to everybody, then the opportunity will anyways be a large opportunity. But when it's not known to people is when the opportunity will be small, right?
Absolutely. So I think there are two examples, to just kind of drive home this point.
Sure.
HDFC Bank all along has been basically a celebrated company, okay? And by and large, there's a high degree of confidence that as a bank, it can grow 15 to 20% on a sustainable basis. And it has done this now for maybe the last 20 or 25 years that it has been around, okay? And it still has been able to create the compounding magic. And it has ended up creating the alpha for the investors. Obviously, if somebody who took a call on HDFC Bank in the 90s, obviously has ended up making stupendous returns, okay? But even then, if somebody's been behind the curve, it still kind of ended up giving you decent returns. So that is one example. The other example is a company in which we kind of invested pretty early on is, say, Symphony, for example, and a caveat that we own it, we have a vested interest in what I'm saying. So if you really look at, say, 5 or 7 years back, maybe more like 7 years back now, it was really not a very well appreciated opportunity. Most people thought, what's the big deal about an air cooler? It's a very simple product and all of that. But little did people go into detail or delve into the greater detail, saying is, there's a huge opportunity for air coolers itself because there's a clear value proposition. The cost of acquiring air coolers is only a third of an AC. The cost of operating is a 9. So there was a clear value proposition. 2 is its relevance on a pan-India basis. And third, the fact that organized players were probably just 10-20% of the entire market, and a market which is growing. And within that, if you are an organized player, you can grow at a much faster pace. So the pie is growing and your share in that pie can also further expand.
Because Symphony was a leader.
It was the leader and it was doing all the things right, okay, for it to remain a leader. And so if somebody had then looked at it early on, obviously then the returns ended up being a lot higher, because that's really when you have the advantage of a PE multiple expansion, the valuation expansion. So you could have your returns coming in from either earnings growth or valuation expansion, or maybe both. And when it is both, the outcome is fantastic.
Well, it has been an operationally strong quarter for ACC. If you look at the top line numbers, they've risen as much as 14.4% for this company to a number of 3,557 odd crore. In terms of EBITDA, that's where the beat lies. It's reported a rise of as much as 18% to a number of 491 crore as compared to a decline that we were estimating on year-on-year basis. Margins have pretty much managed to remain stable at a level of about 13%. In terms of profitability, we're looking at a 16% growth there on year-on-year basis. Volumes also have risen by 8% to a number of 7.1 million ton. EBITDA per ton has been higher by as much as 10% on year-on-year basis for this company to a number of 690. Realization per ton also isn't surprise, risen 6.2% year-on-year basis to a number of more than 5,000. What's gone behind the making of good set of numbers, higher realization and the cost saving techniques that the company has undertaken has led to good operational performance reported by ACC, if you look at the decline in the raw material cost, that has led to operational savings that the company has shown. If you look at the decline in raw material, that as a percent, your net sales has come down to 16% as compared to nearly 24% that we've seen in the corresponding quarter. Also, this would have been higher had it not been for higher power as well as freight and fuel expenses. Having said that, power and fuel expenses have risen as much as a percent. Your net sales have gone up to 21% as compared to nearly 15.6% earlier, while that freight expenses have also risen to 28% from 21% that you've seen in the corresponding quarter of the previous year.
IndusInd Bank will report its earnings today, so the strong and consistent earnings growth trajectory is expected to continue in this quarter as well. In fact, remember at the end of the third quarter, we had positive management commentary coming in, especially with respect to the vehicle finance book. So in terms of the key numbers, net interest income is seen growing by about nearly 20% to 1,999 crores. Net profit is seen growing higher by about 28% to 964 crores, whereas net interest margin print is likely to continue closer to that 4% number. When it comes to loan growth, it is expected to come in at about 20 to 25% on account of that strong CV cycle, so above industry average loan growth number. Asset quality is likely to remain stable, closer to that 1.1% gross NPA number, which we saw in the last quarter. Remember, for IndusInd Bank, exposure to all of these NCLT accounts is not really huge, so RBI's new circular and developments on NCLT cases shouldn't really be of a larger concern as far as IndusInd Bank is concerned. But divergence, if any, could be reported in this quarter. So remember, at the end of third quarter, RBI's audit for FY17 for the bank had not been completed. So if there's anything, that would get reported in this quarter. So watch out for that. That's going to be the most important thing to see. Also, CASA liabilities generation, they've already exceeded the 40% target that the management had. So there will be some upward revision in that. Comments on growth and net interest margin will be important, so as will be the credit cost guidance, which was at 60 basis points in FY18, so now they'll share the FY19 number. Commentary with respect to delinquencies in its diamond loan portfolio will also be important, especially in the light of that PNB fraud. And remember, they had said that they have a small two-digit exposure to Gitanjali gems as well. They've also spoken about their inorganic strategy for insurance and mutual fund businesses, so that's something else to look out for. And lastly, also some sort of timelines with respect to Bharat Financial merger. But overall, no surprises expected as far as IndusInd Bank is concerned. But Agam, what are we looking out for TCS, margins especially?
Right. This may very well be a good quarter, which may indicate a pickup in momentum with respect to deal sizes and deal wins, especially in the digital space. So let me start off with your expectations. We're looking at about a 2.3% uptick in terms of dollar revenues, 2.4% uptick in rupee revenues. We can expect EBIT margins to expand to a certain extent to around 25.5 in comparison to 25.2 sequentially. And we're also expecting an uptick of around 4.3% in terms of bottom line. Coming down to your guidance, and TCS only gives us an indication of margins, well, we can expect them to temper their range of around 26 to 28% from last year. Now that we've also seen Infosys do the same. Not that they're going to follow and take cues from Infosys, but there is an expectation that we could likely see a decline when it comes to its indication in terms of margins. That said, in terms of expectations behind this particular quarter, we are likely to see a whole host of deals that they've struck over the past 3 months to start showing up in the quarterly earnings, and especially deals from Nielsen and Scottish Widows, which is front-ended. And don't forget, we're also looking at cross-currency moves that could partially aid margins as well. What are you watching out for? Well, TCS signed its largest digital deal last quarter, and we're likely to see the same this quarter as well. Not as large perhaps, but we can expect a continuation of that trend. And we're also expecting updates on tie-ups when it comes to Internet of Things, analytics and cloud services. We're also expecting to see consistency in retail and manufacturing verticals, but that is something that will come about when it comes to the management commentary. But on the whole, we're expecting a good quarter from TCS, but we could expect a little bit of tempering when it comes to expectations on margins.
Well, you can stay tuned over the course of the day to find out all the details therein. We're talking about the IndusInd results and also the TCS results, but also you'll find all the live market action right here on Bloomberg Quint Live. But perhaps while you're on your way to work, there are a couple of stories that you can find on the website bloombergquint.com. Here are just a couple of them. The PTI has reported that the Unique Identification Authority of India has introduced an updated QR code that holds details like name, address, photo, date of birth, and that can be used for offline user verification without a 12-digit ID number. The CBI has questioned the Chief Financial Officer of New Power Renewables, which is the company that is at the heart of allegations of nepotism in connection with the 3,250 crore rupee loan from ICICI Bank to the Videocon Group in 2012. Well, that's all you need to know going into trade today. Up next is Indian Open, and that will take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.